That's right. Today we're talking about Chewy Incorporated, otherwise known, a lot of people might think of it as Chewy.com, the pet supply delivery type service, online, digital, e-commerce focused. Pretty interesting stock. One trading pretty high. It's been on quite a decent tear lately. If you look year to date, stock's up 73%. Pretty massive, all things considered. Consider a time in which the market's flat. Down 2% after hours after earnings. So we're going to take a look at those earnings and see what exactly happened. What was the case? So overall, I predicted a flat EPS. I thought it would be in line, but they posted a negative 12-cent marker, which beat by 5 cents. Pretty good on that aspect. Good to see positive growth in terms of that EPS as well, because they were negative for quite a while. Still negative, but they're at least reducing that. Now, revenue of $1.62 billion, up 45.9% year over year. I actually did anticipate a little bit higher of a beat here. Just a little bit. And obviously there's nothing to shun about a 46% growth year over year. I thought it would just be a little bit higher of a beat, and I guess I was incorrect on that aspect, but still a beat nonetheless. And massive growth year over year. Adjusted EBITDA of $3.4 million versus a $14.9 million negative consensus. And obviously shares down as a result. And it's not a shocker at all. We see very positive things for this company, but a negative movement after hours, really primarily focused on the fact that this stock's had such a big run up, and we're seeing it with a lot of these stocks now, where the earnings just aren't keeping investors that excited enough to keep the stock running up. We're seeing it with a lot of these companies, so I would expect tomorrow to be a red day. Now, we get pop-up ads all the time, but so sales are up 46% during the quarter, and gross margin came in at 23.4% of sales versus 23.5% consensus. Not bad. And 21.9% a year ago. So good growth there. Net sales per active customer on a trailing 12-month basis was $357 versus $312 a year ago. Very good growth there, absolutely. And Chewy's adjusted EBITDA margin turned positive during the quarter, which is first for them. Very nice. Looking ahead, Chewy says it's well positioned to thrive in the expanded marketplace. Not specific guidance, but well positioned, and I think they are, absolutely. So, if we talk about Chewy, like what this stock does, I want to mention that I believe that there is certainly a decent subset of the population that really is going to stick to e-commerce now after they've realized the convenience. They used to do all their shopping in store, and I think a lot of people are going to realize that the convenience. And a company like Chewy.com is very convenient for these pet owners, right? They were unable to go out and buy supplies, might have been sold out, but Chewy.com let it be very simple. You can have a monthly subscription where every single month they'll send you the same food, they'll send you the same treats, whatever it might be. You can set up just one-time purchases, whatever it might be. Now, that's what Chewy does well, and I think that does make them really at the point where they should thrive for the future as e-commerce just continues to take over. And we talk about how really what this pandemic did was push us more into the future as far as business is concerned. It pushed us a lot more into the future. We talk about virtual meetings. We talk about e-commerce. They just pushed us to the extremes of where we were headed, right? So we're getting there a lot quicker than we were before. So let's look at this earnings announcement. As we like to do, net loss on this company, which I'm skipping right to. Net loss of $47.9 million. I don't like that. But that includes a share-based compensation expense of $42.3 million for obviously employees or what could be executives. So net margin of negative 3%, declined 60 basis points year over year. Don't necessarily like that. That's for sure. But the adjusted EBITDA improved 122% year over year, and adjusted margin of 0.2% improved 160 basis points. Pretty nice, but net margin obviously negative. You don't like that decline. The adjusted, they fudged some numbers around, and that's why it looks positive. So So, as for the CEO, we had a strong start to 2020 with the first quarter net sales increasing 46% year over year and gross margin expanding 50 basis points. We also achieved a significant milestone by delivering our first ever quarter of positive adjusted EBITDA, which again is just adjusted, so it's kind of fudging the numbers, but still. We are proud to be an e-tailer, I hate that term, of choice for millions of new and existing pet parents during this unprecedented time. Chewy is well positioned to thrive in the expanding marketplace, blah, 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 as we already saw. So that's as far as what they have for this earnings release. Really nothing massive. Nothing massive at all. Yeah, nothing super excited. I did want to see if I could get this balance sheet for them, but they're being very, very cryptic with it. Let me tell you what. They're just not being very nice to me, and I'm really hoping that this is going to be what I want to see. So I don't know if it is, but we're going to try and see if we can find what we need. And if we can't, well, we're just going to not find what we need. You know what, Chewy.com? You know what I think about you for doing this? I think you're pretty rude. Yeah, I think they're being rude. I need to know this company. You gotta show me. You gotta show me what I want to see. And if you don't, I'll be upset with you. You can't. You just can't hide it from me, right? You just can't hide it from me. So they're giving me a quarter-over-quarter comparison here. So you see, from cash and cash equivalents perspective, right now they've got 192 million versus 212 million 3 months ago. A little bit of a decline there, but as far as inventories is concerned, you see inventories raised quite a bit. 448 million versus 317. Very big increase in inventories, which can be taken to one of many ways. Obviously negative for something that's really a perishable item like pet supplies, for the most part at least. But total assets in general of 1.1 billion versus 932 million of 3 months ago, so good improvement there. So the question is, does liabilities also increase? Total liabilities of 1.5 billion versus 1.3 billion a year ago. Now I gotta say, I don't like this balance sheet by any means, and we talk about a company that's still posting a negative net loss, or posting, really it doesn't mean, that's kind of a double negative there, but posting a net loss as opposed to net gain is concerning when you already have a balance sheet that's already damaged like this, right? We're talking about a stockholder deficit of $400 million, and how do you dig out of that? It's hard to, and I think that hurts the valuation on this stock, and for me, it makes it hard to value it where it's at right now with a market cap of 20.6 billion. I don't know if it necessarily deserves that with an annualized revenue number somewhere around the most likely this year, probably going to see around, let's be fair, 7 billion maybe. We're being nice. We could probably see 8 billion if we're being generous, okay? $8 billion annualized, trading in a market cap of 20.6 isn't that absurd. But if you talk about the balance sheet, it is concerning. Now, we did see improvements this quarter as far as the EPS is concerned, but I don't like that balance sheet right now, and I don't think this company is one that I'd like to invest in right now. Valuation is just a little too high. I mean, when you get the stock back in the 30s, high 20s, 30s, I think it's a good buy. Right now, I don't think it's that good of a buy in the 50s. I just don't know if it's necessarily there. I want to see the stock decline at least to the 30s before it's worth buying for me, just because I don't like that balance sheet too much. And they can raise capital, absolutely, but it hurts the long-term perspectives of the stock. So, it's a hit or miss right now. I don't know what I think about it, but I don't know. I'm definitely not buying right now.